You can use your company's net income to qualify for mortgages even if you don't pay yourself a single dollar. In today's video, I'm going to share a mortgage product that incorporated self-employed professionals can use to allow you to use the net income within your company as part of your personal income when it comes to qualifying for a mortgage on your home, a rental property, or a second home or a cottage. This is especially useful for those of you who like to pay yourselves as little as possible in order to save on taxes by retaining earnings within your company. Stay tuned. Hi, my name is Kogan and I'm an incorporated self-employed professional and I work as a mortgage broker. If you're interested in connecting for a quick 15-minute call to discuss your situation, feel free to book a call using the link in the description below. All right, let's get into it. So this particular mortgage product is useful for those of you who are incorporated business owners. This includes realtors who may have a PREC or any other incorporated professional like healthcare workers, IT workers, the list goes on. Now, the value of being incorporated as a business owner, as you probably know, is to have that small 12.2% small business tax rate within your corporation. So if you earn more income than you need, you can retain it in the company and save on taxes. But the challenge with this is many lenders then only look at the income you actually paid yourself in salaries or dividends in order for you to qualify for a mortgage. So there's always been this challenge of, do I want to pay myself more money and be taxed on it? Or do I want to leave the money in the corporation, but then I don't have good mortgage options? Previously, most of the time we had to send self-employed professionals to be lenders, where there's lender fees and higher interest rates as a result of this sort of trade-off. Now, this mortgage product is offered by Scotiabank and it's called the Business for Self Plus program. And here's how it works. You continue to use the 2-year average of the salaries and dividends that you've paid yourself. And in addition to that, you can use anywhere from 40 to 60% of your company's net income after taxes. Now, you have to deduct the dividends from that net income after tax amount, and Scotiabank is going to determine whether they will let you use 40, 50, or 60% based on their internal credit rating of you as a borrower. Just a note in terms of the 2-year average when it comes to salaries and dividends, if the amount is declining, so if you paid yourself more in 2021 than in 2022, they will use the 2022 amount, and that also applies for the net income in the company. If it is declining, they will only use the lower amount. If it is increasing, then they'll use the 2-year average. So how do you actually get this mortgage? You do need to have 2 years of financial statements prepared by your accountant for the last 2 tax filings for your company, and you'll have to provide the standard proof of income documents personally, like your T1 generals. So how does this actually work in practice? Let's look at an example of an incorporated professional who makes $200,000 in that net income after tax amount. And say they decide to only pay themselves $50,000, whether it's a combination of salaries or dividends. In this example, let's say Scotiabank allows you to use 50% of the remaining funds in your company in addition to the $50,000 of income that you pay yourself. So you can take the $50,000 and you can actually add half of the $150,000, so $75,000 to your income, bringing your income that you can use to qualify up to $125,000. And one of the best parts of this program is it can be used to purchase a primary residence, a second home like a cottage, or it can even help you qualify for more rental properties. So if you are an investor looking to buy more properties, and if you're looking to qualify for the next one, if your ratios are tight or if your properties don't cash flow, this can allow you to use your company's income to help you qualify for that next rental home purchase. So what are the restrictions to using this program? If in the past 2 years you had a year where your business went negative, where it didn't make any profit, you won't be able to use this product. And it only applies for mortgages where you're putting 20% down or greater. This program cannot be used for an insured mortgage, meaning a 5% down first home buyer type of mortgage. Another point to note, they do reduce the total debt service ratio, which is one of the calculations that is used to find out how much you can qualify for. Typically with Scotiabank, we can sometimes go up to 48% in the total debt service ratio. That is brought down to 44%. So you just imagine roughly a 10% decrease in the typical borrowing amount, but you're adding all this additional income to qualify. And now finally, all the shareholders of the company need to also be on the mortgage application and need to be buying that property together. So if it's a husband, wife who own the company and you're buying your primary residence, obviously it's not an issue. But if you have other outside shareholders or partners in a company, this can make it very complicated if you want to use this program to buy, say, a primary residence. Probably not going to be worth it at that point. And finally, if you're someone that wants to use this program, but maybe you're a little bit early on in your career, in your business, you don't have that 2 years of financial statements prepared yet, something to keep in mind is you may want to go ahead and get 2 products from Scotiabank. These can be credit card, a bank account, a line of credit. The reason for that is eventually when you want to apply for this product, if you have 2 other products with Scotiabank, you can typically qualify for what are called bundle discounts, so that reduces the interest rate you can get on the mortgage. Plus, by having those 2 products for a longer period of time, you can build up your internal credit rating within Scotiabank, and this way you can hopefully qualify for that 60% amount instead of the 40%, allowing you to use more of your net income in the company. There's not a lot of great information about how Scotiabank uses their internal credit rating system to do it well, so my recommendation is just get some products with them, make the payments on time if there are any, and stay in good standing with the bank so that when you go to make this application, you'll be treated favorably. So again, if you're one of those people who make a very good income within an incorporated small business, and you happen to be one of those people who also like to pay yourself as little as possible in order to save on taxes and to really save money within your corporation and retain those earnings, this can be a great way for you to actually qualify for a mortgage, even though you only pay yourself a very small amount of money. I hope you found this video helpful. If you're interested in having a discussion about this business for self mortgage product, or if you have any other questions relating to real estate or mortgages, feel free to book a quick 15-minute call with me using the link in the comments below. Until next time, all the best.